Hey everybody, welcome back. It's Monday. I'm going to review the trades we did. I want to talk global macro. A couple things I saw today I thought were pretty important. We've talked about on the Russell, so equities have been up 8, 9 weeks off of the October lows, and so the 8.6 count is actually pretty. It's a pretty powerful cyclical frequency. It's a derivative of pi, and the I've talked a lot about the global business cycle is 8.6 years, which we're coming into January, which was 4 years down from the 2015-16 peak. So a major turning point there. I'll have some more to do on that at the end of the year. Which markets are turning, or we may even be putting in a major high here in equities with this turning point here in December, January, but still a lot of month left for that for us to be talking about that. But 8.6, whether you're looking at a hourly chart or a weekly chart, um, it's still all the same regardless of the time frame. But when you do have the bigger cycles, I think it matters. So we like to use some of the oscillators and stochastics, which is an equation of motion, which is very cyclical. But 8.6 weeks, just counting out the candles here off the low, I thought that there was reason to think that maybe this was going to be a move in the Russell back to the highs. So small caps have been underperforming, which makes sense because we're late cycle, growth is slowing, the data is not really improving. Still kind of a very bearish setup. We may have a zero handle on GDP for this quarter. So a lot of fundamental stuff that's not showing the reasons for a rip-roaring rally in small caps, which there's a credit cycle that comes into play there too. So lots of things. But anyway, we just want to see follow through when you make a high like that on multiple days and on a weekly basis. The fact that we intra-week went above the high and now we're back below it to start this week and start the month, I think there's a really good chance this is a fake out here on the Russell. So we came in, went short this morning after this breakdown. I kind of show it here on the NASDAQ. We went short S&Ps first, and then I was actually leaning a little bit long the NASDAQ before this break. And then once see this candle here, this bottoming tail, we couldn't hold the lows from last week, and then the selling started. So we quickly stopped, went short, was already short S&Ps into the drop. And then we like to trade the 1 minute. So there were some rallies here you could have sold into. In addition to, it was the same trade on the Russell. So got on the short side of that. There was plenty of lower highs and bounces you could have sold and made money today. But I think that probably continues into the rest of this week. I like that we took out the swing line lows when we look at the intermediate term. There's some terminology here that if you've kind of followed me for a while, you're one of my guys that it would make sense. But a lot of what we look at in our model on a trending basis on the intermediate term broke down today. So I think you want to be a seller. I'm still in core short the Russell. I'll be a better seller on a bounce. And I hope we have the same kind of pickup in vol and continued volatility that we had today, because that just makes for bigger moves, more money we make on a trending basis intraday. So that's all good stuff for the day trades. And then I'm watching 15-16 area on the VIX. You start to make higher highs again. If you get back above that area, this is the front month, but even on the actual index, that's going to change the machines, and there's a lot less willingness to buy, and the momentum will start to shift the more you get above 15-16. That just seems to be the level where I think a lot of the algos are plugged into. And then lastly, I thought it was important today was dollar yen. Made the call this morning that we should be starting to sell rallies and pick up your short exposure. I sold a bigger chunk this morning just because cyclically we're high on the daily cycle. We're back at our pi line, which is a very powerful concept. I teach that, guys, in our pi cycle trading secrets course. And even on a weekly and monthly date basis, I mean, we're cycling down on the weekly. You're back towards the 200. A lot of institutional traders have that average. The monthly, same thing. So I think we're setting up for a risk off move. if we get more of the same today. This is a pretty solid real money candle. We'll see if it has some follow through. Like I said, I'm core short. I want to stay that way. I mean, we're still making higher lows in the intermediate term, but if and when we roll through 108, 108 and a half, and it's going to be back on. If you look at it in futures, yen futures held high perfectly today. So I added my longs in yen, and I told my guys we're going to look to be buying dips even on the yen intraday. So yeah, I don't have much to say on BTC. Had a pretty good bounce last week. I kind of went back and forth on whether I wanted to hold or trim some, and we may be going sideways here. There's obviously still risk we break 6,500, which I would cut my risk and go to the sidelines actually. But I don't know, we might have to sit through a daily cycle. We'll see how that resolves itself. I really wanted to take half of this long off here from pi closer to 8,500, and we'll see. It's probably going to be a little bit of a battle there. Guys, today, Cyber Monday, I'm running that Black Friday sale. Over the weekend, I took 20% off the prop program. So I had a couple of you sign up, which is awesome. And I did a couple webinars on that. I'll link in this YouTube video, the YouTube, if you guys are interested in the program, I have some details on the webinar I did. But I knocked down 20% off the price. So you're saving $1,000 if you sign up by midnight tonight. So just a reminder, do that and start December with us. And yeah, looking forward to it. A lot of you have had huge strides, making a lot of success, having some big days, common days, $1,000, $2,000, $3,000 days, going through, making $9,000 inside of 30, 45 days. And if we get the volatility, and this has been a really low and vol environment, so the trading's been just, you don't have as big of moves, so you don't make as much when you're right. But now the vol's picking back up into December, January. And, we talk about other things too, guys, other big picture positioning. I talked a lot about potentially equities rolling over in these next 2-3 months, and more of this recessionary risk off move come back into play, whether we look at the front end. So we were talking about 2-year treasuries, the euro dollars. I've been short the long end, but we talked about covering some of that today. So just a lot to learn. If you guys are passionate about trading, this is your thing. I would just join the prop team. You're going to get time with me in real time, taking real risk. You get all our trading courses. I still have those marked down also, guys. If money is maybe too much of that's too big of a hurdle for you guys to invest in yourselves right now, the courses are knocked down. So if you're interested in Forex, the Pi Cycle trading secrets, this is the full model. Here's the 8.6 ECM and the long-term business cycle that I'm talking about. So these are all great prices. I mean, I've paid $3,500 just to learn basics on options, like call options and what is an option, but nothing about how to trade them, nothing about timing, nothing about risk management, nothing about spreads and how to actually apply them. So I've got all my option stuff here, including the 9-hour institutional model. That's the 3 pillars to that of how to correctly analyze the analysis, how to do your execute and risk management, how to structure your max loss per trade, per day, per month, per week, portfolio construction, all that stuff. So the 56% off all the courses, that's a great value. And yeah, guys, we'll see some of you on early. I hope we get a little bit more of the same follow through here on equities. I think that's definitely possible. I mean, we finally broke that swing line. We look at S&Ps, which is obviously a lot of people have their eye on. Finally back below the 8. A lot of traders follow that. That's showing us the intermediate term. Daily cycle's right for it. We're overbought on the RSI since October. There's lots of room to trade back to 3,000, I think. And if it starts to go, it could go in a hurry. So anyway, guys, sign up. Let's take advantage of it. I'd love to have you on the team. And we'll see some of you hopefully in the morning.